Should you rent or own real estate? I'm going to answer that question. Of course, I can't give you a definitive answer, but maybe I can help you decide which one is best for you. Because everyone has their own situation, everyone has their own values, their own plans for the future, their own strategy. So, it's going to vary on a person by person basis, because also real estate is different everywhere that you go. In fact, there's no piece of real estate that is alike. Every single piece is different, even if they are identical, like two different apartments in a huge apartment building, they're still different. Maybe one's on the first floor and the other one's on the second floor. Maybe one has a different view, and so on. So each piece of real estate is unique, and when you're wanting one, it really makes sense, at least at first, to buy. It seems like there's no drawbacks. Of course, you have to manage it. You have to maybe fix the problems and stuff. That's what typically people think of. And of course, that is true. But there's a lot more to consider than just that. So the first thing I think about is how much does it cost to rent this place that you want? So let's say if you want to rent a 3-bedroom, 2-bath house, wherever you are, and you could rent it for, let's say, $1,200. If you can buy it and the mortgage be less than $1,200, well then there's a good chance that it actually makes sense. If the mortgage is more than it would cost to rent it, in most cases I would say don't even bother. Yes, when you buy a house, a portion of what you're paying goes towards the principal, but in the first 10 years, most of it goes to interest. And usually people move around every 10 years or so. So by the time you start getting to the point where you're building equity in the house by a larger percentage of your payment going to principal, you move. It's really the last 10 years that you pay off the mortgage, for the most part. So unless you're planning on staying somewhere for 30 years, which some people do, some people are like that, so that's why there is no one size fits all scenario. But if you are, maybe if you know for sure you're going to be in a place for 10, 20, 30 years, why not? It makes a lot of sense to buy it. But if you're not sure, then it probably doesn't. And I mean, if it was a great deal, if it was cheaper to buy it than it would be to rent it, maybe it would make sense to buy it, even if you're not planning on being there more than a few years, because you could always rent it out. But even that depends, because I am not tied down to one geographical location. I live in Orlando now. I'm from Ohio. I've lived in Daytona Beach. I lived in Miami. I like Orlando, but I don't know if I'm planning on being here forever. So, if you're going to rent something out, but you don't know if you're going to be in the area, that proposes another problem. It's not easy to manage real estate from a distance. It's a lot easier when you are close by. And while you could hire a property manager, I did, and I wasn't happy with it. Maybe I didn't do a good job choosing the right company, but it was in Daytona Beach, and it was one of the biggest property managing companies. They're well known, and they have good reviews. So I don't know. That's a whole other topic in of itself. So it's not easy. It's not easy to do on your own, especially if you don't live in the area. and it's not easy to hire a company either, because there was just a lot of things that they were doing that I know I would do better. I immediately, once I fired the company, I got a tenant in there. They were having trouble getting a tenant. I got significantly more than they were trying to get from a tenant. And yeah, so there's a lot of things to consider. But I think the biggest thing is whether or not the rent is cheaper than the mortgage. It is nice paying for something and having it pay itself off. Another benefit of owning, of course, is appreciation. So with the coming years ahead, I think we're going to have a much higher inflation rate. So let's say over the next few years, and this may seem a little crazy, but again, I think it's going to be much higher. If the prices of everything went up 50%, well, then your $200,000 mortgage is actually a lot cheaper because you'll be paying it off with weaker dollars. So that is another benefit. But again, you have to manage it. So should you rent or should you buy? I don't know. You let us know in the comments below. If there was one of these things that I mentioned that really helped you out, let us know in the comments below. If there's another thing that you think is important to consider, let us know in the comments below. I'll give you one more. Let's say if you were to buy a house, you're gonna gain equity over time. Of course, in the first few years, you're not gonna pay off much of the mortgage. But let's say the other way about getting it is you could see some appreciation. Even just inflation alone could basically force appreciation. Well, most people don't have much of a savings account. And this is a little tip for you viewers that actually watch till the end. So this is a kind of savvy way of playing it. And like I said, most people don't have much savings. They don't have a few $1,000s. So if there's a business they want to start or something big they want to do, they usually don't have the capital to pull it off. Whereas if you have a house and it appreciates, just inflation alone, I think is going to make that happen. You could always get a home equity line of credit, home equity loan, refinance, pull some of that equity out. So there is that advantage, and if that sounds like something that might really help you out 5 or 10 years down the road, that alone might be worth owning your own home for. Another thing is for the most part, the mortgage is set in stone. The insurance may change, the taxes may change, but if you're in a 30-year fixed rate mortgage, you will have the same mortgage payment for 30 years. And with the future looking the way that it is, odds are we're going to see a lot of inflation. The prices will probably double or triple faster than what people think. So if the prices double, a $200,000 house is like a $100,000 house. So if you could tap into that extra equity, then you might be able to get a sizable chunk and be able to do something with it. Now, of course, the money wouldn't be as valuable as it is today, but if you bought a $200,000 house and it went up to $300,000, you could maybe get half of that equity, get a $50,000 loan, and then start a business with it. And then instead of working in a restaurant, you could own your own restaurant. You go from making whatever you're making, $14 an hour, and you could start making 50 or 100,000 a year, something like that. All because you bought a house instead of rented. But usually when we're at a peak of a bubble, then the housing prices are too inflated, and the mortgage will cost more than the rent. And you don't want that, because if you decide to move, you can't rent it out at a profit. Like, you may buy a house because, like, this, I'm living in it and he wants to sell it. It's either move or buy it, and maybe you want to buy it. Things like that may come up. But, you gotta figure, what if you move out? Are you gonna be able to rent that house out at a profit? And that includes a little bit of maintenance fees, that includes a little bit of maybe vacancy, turnover rate. When people move out, you might have to change the carpets or paint the walls, things like that to consider. So you've got to make sure you've got a good amount of profit in there to make sure that not only can you pay those expenses, but there's actually a little incentive in there for you at the end of the day. And this is one of the most important things to consider when buying a house. I hope you found that really helpful and enlightening. If so, let us know in the comments below what part was a big aha light bulb moment for you. Also, give us a thumbs up, subscribe, like the video, please, and I hope to see you in a future one.